presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to John in Orlando. John, what's going on, brother?
Good afternoon, Tom. How are you?
I'm doing great, man. Yourself?
Good. I'm going to tell you, I've been listening to you since your radio days back in 99. Appreciate what you guys do. But what I really enjoy that you brought back Tim Ward. This guy is as smart as a whip.
I am so happy for that feedback.
Yeah, because he's one of a kind. He's got to be the number one market timer. I'm telling you, it's like he calls it really good.
He does. I really appreciate the feedback, man.
Yes.
Now, Tom O'Brien.
Good Friday afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We got 53 minutes left to go in the market week, and we have markets right near the highs of the week right now. You got the S&Ps up by 47 points. We're up by 0.8% at 64.13, folks. Yeah, less than 1% from the highs. You see it on a daily basis, 64.68, and on a 15-minute basis, just under the highs of the early yesterday, right? We reach a high right now, as in the last hour, of about 64.19. You got highs early yesterday of 64.26, but we are sitting right at the open yesterday and a little bit of a tedious area. You saw quite a meltdown in the indices yesterday, but not today, man. S&P's higher. NASDAQ 100, how about 0.9% higher right now? Up 211 points, 23,708. You get the Dow up about 0.5%, 210 points, 44,291 in the Russell, in the positive by about 0.2% as well, trading at 2227. Bitcoin down $1,000 at $117,000. Ethereum having a moment, and it's continuing. When I was on the morning program, I was talking about this morning, started the program at 9 o'clock, said 3,900. No, we got 4,000 again. Now, on Ethereum, you got 5,000 hanging out here. That was the highs of 2021, and this is an important area, but boy, we're blowing it all away. And you have highs out here. Okay, this bar from December, this is a weekly on Ethereum, closed at 4,068. That's the high close on a weekly basis. We're $10 above that right now, Ethereum. Ethereum's a little bit different. Cryptos, they trade 24 hours a day. The weekly, it just never stops, right? In crypto, that's your weekly. And yeah, on a monthly basis, though, how about that volume in July on Ethereum futures, right? You want to talk about price and volume, folks? There it is, baby. Right? Volume in May, slight pullback on a slight dip, and kaboom. You break out to the upside, and this is going to break the highs of last year on Ethereum right now. Ethereum up by almost 5%. Crude. Lower prices at crude. Now, I'll tell you, what's interesting here is, so you hit $62 this morning. Little volatility. We got news everywhere in this market right now, but we're dipping down from $70 in the last week. And yeah, if you can hold off on those gas pumps, folks, you need gas, give it a day or two. See if it comes down, because I tell you, I was filling up yesterday, and it was $3.15 in Florida. There's a lot of times gas down here has been $2.95, $2.92. Tampa's got a port, so we have low gas prices around Tampa as well, even you make it out into Lakeland. And I was actually surprised it was so high, though. Think about that, right? $2.99 gas at Sam's, where I go, Sam's, Walmart. But that translates to about $3.15 gas at most of the stations, which is pretty expensive compared to where we've been. But guess what? You have crude. The reason why I mention it is, yeah, I'm paying prices of the gas when crude was pushing 66, and it varies, folks. Okay, it doesn't quite translate to a barrel of crude versus what gasoline costs. But they are related, and you have crude approaching the lows at $63, man. We hit a 62 handle today, and yeah, $60 is the next spot. That's where this market has found a bottom in months past, and that looks like where we're heading again. Now, we jump to yields. You jump to the dollar. A little bit of lower price, higher yield, so a slight reversal of what we have going on from last Friday. But all things considered, we get the 10-year right now flirting with about 4.3%. All things considered, 4.3%. It's a low yield right now. And the odds of a Fed cut approaching 90+% when we're talking about the Federal Reserve when they meet in September. And so, yeah, pulling up the exact yield on the 10-year right now. We have the 10-year at 4.29. Okay, 4.29. Now for some context here. Okay, this area of about 112.12, right? We made it to as high as 112.15 on this run. That correlates to a 10-year yield of about 4.2%. And that seems to be the barrier right now. But that barrier is not going to hold if we start going on a Fed cutting cycle that more than likely is probably going to happen. Now, the data can change, of course. But, I mean, even when you take a look at swaps right now, okay, where the Fed funds futures are, 90% is what they're pricing in that the market's going to be cutting when it comes time for the September meeting. You go out to October, the market thinks it's a 60-40 chance that they cut twice by October, and one cut is the 40. And somehow you got a 4% chance that there's no cuts by then. Maybe you got a cut and maybe you got a hike. Who knows? And then you go to December, and the market thinks we're going cut. Yeah, market thinks we're going cut right now. You go into January, and it stays there. Okay? So that's where the market is right now. The market's thinking we're getting 3 straight cuts. That's what's priced in. You're going to see pressure on yields. As in, you're going to see higher price, lower yield as that date approaches. And the dollar chopping around near 98 right now on a weekly. We reject that 100 price point, and we've just been chopping around at 98 since Wednesday. And yeah, we take a look at the weekly. Not clawing back the prior week, but nonetheless, pressure to the downside. Now, gold is its own animal today, folks. Don't get caught in the headlines, all right? Yeah, and there's your clarification at 145, okay? Comes out that gold is going to get tariffed. Okay, futures go haywire last night. The White House said it will clarify misinformation about gold bars facing tariffs. Misinformation coming from the CBP, the Customs and Border Protection, said earlier the gold bars are not excluded from tariff. Gold futures closed their record but have pulled back. The White House intends to issue an executive order in the near future clarifying misinformation about the tariffing of gold bars. And yeah, probably could have been handled a little bit better, right? I guess things get clarified. You know, you take a look at how Bloomberg puts it, pretty the exact same thing. Clarifies misinformation, and that's how they're calling it. But yeah, there was even speculation in the den last night. It's pretty tough when you can't quite know what's going on as things even get announced. But they're going to post an executive order in the near future to clarify that. It's going to issue a new policy clarifying that imports should not face tariffs after the government stunned traders saying that they would be. And yeah, so nonetheless, gold pulls back. And as I was saying this morning, folks, okay, boy, if you told me the most deviant way for gold to make a high before you pull back, oof, it would be on some fake news from the government that somehow spikes it to an irrational high, and gold makes an all-time high on that news. We've backed off almost $80 from that level. We're coming back, folks. Don't go away.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We have the S&Ps up 49 points right now. We jump around to some of the market leaders. How about Apple? It's not stopping, folks. Yeah, all that volatility sucked out, as in all the fear of the tariffs and everything. A nice $600 billion investment in U.S. infrastructure. U.S. infrastructure, Apple infrastructure in the U.S., right? But boy, you're talking about a run right now from 202 to 230. $30. Apple's up 15% since Tuesday. Now, Apple had underperformed the rest of the market. You have a low out here of 170 for the, I was almost going to call it the COVID lows. We'll call it the tariff lows. And you came into that news at 200, right? You were barely up, 12% off the lows. And we had the S&Ps trading up 35%, 30% easy from the lows. And some of the other tech stocks, you take a look at Microsoft shares, you bottomed out at 344, you're at 522. So Apple had been underperforming dramatically, but you are pushing this market higher, up by 4.2% for Apple shares. Microsoft up with 30% right now. Amazon down a third of a percent right now. Jump over to Google. They're finishing, yeah, look at that. Google participating in the run, up by 2.5%. NVIDIA up a full percentage point. AMD down by 1/10. All right, a lot of focus on alternative assets, all right? You have, as this CNBC article puts it here, alternative assets are headed for your 401k. What investors need to know? Well, how much money is out there, man? You're talking about in 401ks alone, probably close to $10 trillion, okay? $8.7 trillion was held in your 401k at the end of the first quarter, right? I did this yesterday. At the end of the first quarter, you got to go to the end of March when the S&Ps were at somewhere around 5,700. You're 700 points above that price level. You're a solid 12 to 13% higher. So you're talking about adding, if you're in a 401k, and it's not exactly how it works, but at least another, $1 trillion, right? So you're at 9.7 trillion in 401ks. You have 12.2 trillion total. Can you imagine being Wall Street? Okay. Boy, this is where you see lobbying, and, people should be able to do what they want with their money. But I'm going to go over why this is a problem, okay? And you should know, if you're listening to this program and you're a student enough, folks, whether it's on YouTube, you're in the Tiger's Den, okay, if you've been in the market long enough, when you talk about private equity, if it was an easy investment, Wall Street would scoop in. It's why private equity is such a big player right now, right? It's why private companies stay private for so long before they go public to push it out to the public, right? The reason why companies are staying private for so long is if the gains are there, private equity, venture capital, they come in. When the easy gains aren't there anymore, there's a lightening up, and then eventually they push it out to the public, right? That has changed. And yeah, you can already, great point, already, okay, for astute investors out there, and you don't even have to be that astute, right? For investors that really take an active hands-on role, let's put it that way, you can do a tremendous amount with a self-directed IRA, folks. I encourage you to look into it, okay? When my dad was running the real estate fund, many people were able to use 401k money, retirement money. They would set up a self-directed IRA. They would then invest that money as part of their IRA into the fund. That was already done. So so what this is coming for, right, is this is coming for the uneducated investors that just put their money into a plan as part of their employment, and that gets invested. And what this is going to happen is that they're saying it's probably going to end up as a portion of larger funds. You're not going to have one fund that they give it to you, okay? This is the quote here. They're probably going to be part of a managed account. They're going to be part of a target date fund. It's not going to be that the participant can go put 20% of their total plan assets into a hedge fund. That hedge fund is going to be within a target date fund. So our participant is not necessarily choosing how much they allocate to a hedge fund or private credit. It's probably because you can go, they're worried, right, about the in and the out of that. And that's a great, yeah. And people use a lot of it's a great, our man John Camp in the Tigers Den, folks, that you can fund bridge loans, right? Self-directed funds. Yes, 8 to 9. My dad was running a lot of those, and we still do that, okay? I still do that, folks, okay? I have investors that have 401k money that are invested in real estate. Yeah, that's it. It still happens. So that can already exist. So who are they coming for here? Well, they're just coming for if you have money in your plans. Okay, now check this out. This article, I'm going to share it in the Tigers Den. All right, here. I'm going to pull it right now. Where's my gifted article? There it is. All right, I'm going to copy my link. I got my gifted article. It's going in the Tigers Den, folks. The URL that it gives me is always 17 pages long. When I do it, I'll post it in the YouTube Tigers Den as well. Okay, that's a gifted article from Bloomberg. The URL is too long in the YouTube Tigers Den, folks, to actually even post it, all right? If you're not in the YouTube Tigers Den, get in the Tigers Den. That's a good one. Now, this one is from May, okay? It's August, but I remembered it, and I looked it up, and I found it. And I looked it up when I saw this article, and this is a great one, okay? Check this out. This is an opinion piece, okay? So, take it for what it's worth. But the point here is, where are you getting? Where are these plans going to buy all these private equity investments, right? Do you think that the biggest money in the world is in the business of giving John and Sally that have no investing ability whatsoever access to their private equity investments at the best price that investor can get it at? No, of course they're not. They're going to get every dime they can, and that's who you're going to be battling with. And the fees are going to come into this remarkably as well. Now, financial advisors and retail investors are late to the PE party, but they're an attractive target, all right? And like I said, I posted it in the Tigers Den. Check this out when you get a chance, folks, okay? I'm going to try and touch on a few moments in this article here, okay? Now, take the politics out of all this, okay? But maybe Harvard needs a little cash to shore up their balance sheet. But guess what, okay? The one thing that's always difficult is, number one, mark-to-market. That's the biggest problem of making these types of investments, okay? 40% of Harvard's endowment is illiquid private equity. Twice its holding of stocks and bonds. If they were just printing money with that, folks, okay, they'd figure out how to stay cash flow positive. That's not what's happening, though, right? Yeah. And what they're worried about is selling the stocks and bonds, okay, to further raise the already aggressive allocation to private assets. When they need cash and they have to sell the liquid parts, then all they're left with is the illiquid parts, right? Well, guess what? We got a plan. We're going to sell it to retail investors. So this one was in May when they were in talks to unload $1 billion to Lexington Partners. Now, they are a division of Franklin Resources, Franklin Templeton, okay? We've all seen their ads. Well, guess what, folks? Franklin Templeton, they're in trouble. Yeah. All they keep doing is losing assets, all right? Now, Franklin's funds, the expense ratio is about 0.88%. Okay? That's a tough one when even that yield, even that fee, okay, their expenses, is well above what you're paying for many different funds out there. Net flows to Franklin stock and bond products. Folks, tell everybody you can hear about this stuff, okay? We're going to talk about this when we get back. It might be the most valuable information you hear this hour because you don't want to be involved in these funds, folks, all right? You don't want to be, the risk is just too much. Of course you can make money, but we'll talk a little bit more about it. You're talking about fees here, folks, on a yearly basis that you have to dig through the fine print of 3.61 a year. We'll go over more of it. We'll be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Welcome back, folks. S&P's right now just chopping around near the highs of the session. We're up by 47 points. NASDAQ 100 up by 206. You have Apple charging higher. And yeah, so check out some of these fees and some of these numbers before we get away from alternative assets. Franklin Templeton, okay? You wouldn't know it from how often you hear everything, their name, whatever it is. Now, net flows, net inflows, you could call it, but net flows to they're not inflows. That's why they don't call them net flows. They're outflows. Net flows to Franklin's stock and bond products have been negative every year for the last 10 years. Did you know that? I didn't know that until I read this in May. The impact on Franklin's business is evident. Well, it better, of course it is when you're losing business for 10 straight years. Operating income, about a third of what it was a decade ago. Profitability, down more than 80% at the same time. And the company's market value, well, if your operating income, either way, shrunk by about 70%, right? To revive their fortunes, what are they going to do? They're going to sell everybody alternative assets, and they're going to charge you an inordinate fee every single year that's going to compound. Folks, if people are paying 3.6% a year in retirement funds for 25, 30, 35 years, I'm going to have to consult with ChatGPT this weekend and give you the numbers of what type of returns you're going to need to pay a 3.61% fee on a yearly basis compounded in a retirement account. It's criminal. That would be the take, folks. Okay? It's bad enough when you get fees in there compounded, but you start talking about almost 4% annual fees on that portion. Whew. When you compound it over long periods of time, you put it in a tax-free account, the impact on that on a longer-term basis is monumental. Okay? Now, going back. So Franklin Templeton CEO, Jenny Johnson, it's a massive opportunity. Yeah, of course it is. You're talking about $12 trillion of funds that you can now sell to at a 4% VIG on a yearly basis. Franklin already managed $250 billion in alternative assets at the end of last year, up from $45 billion just 5 years ago. Analysts estimate that net flows to those alternative investments will grow robustly in the years ahead. You have BlackRock, whose index funds drove down the fees, is helping the charge. He argued recently in one of his annual letters, that ordinary investors would be better diversified with private assets. Folks, you believe that, go buy them and you're getting sold, man. Hey, don't believe that, okay? He also complained that excluding them thus far has widened wealth inequality. The reason why you're poor if you're poor, folks, is because Larry Fink can't sell you alternative investments at 4% a year. Tongue in cheek, but that's what Wall Street is telling you, folks. That's a bummer. Okay? But yeah, he also complained, right? But guess what? He neglects to mention that much of the wealth was made when the industry was small. Check this out, okay? This is like burying the lead. This is the part I wanted to get to. Perk your ears up, folks. This is the good one, okay? Much of the money was made in the beginning, like anything else. From the beginning of the 80s through the 2000s, that's when much of that wealth was made from private equity. Now it's just the opposite. The top quartile of private equity investors took home most of the profits, leaving other private equity investors no better off than they would put in stocks. Many of them worse off. Folks, that was a 25 to 75 scenario. What 25, 75 do you think are getting pushed off to retail? Do you think that the top 25% are going to be the ones unloading great investments to those retail funds? Or do you think it could possibly be the people of the 75%? Right? Are you going to be paying them 4% a year to manage your private equity? Yeah. And now, who's going to buy all that? Well, you're going to buy it. The people who made all that money are going to sell it to you. Yeah. And it's not like it's easy, too. The fund's expense ratio, not easily located on the website. Investors have to read the fine print, go dig through those filings, and one of the funds they talk about, 3.61%. Now, here's the last part that's the best. You know who else is banking on this? Morningstar, the ratings agency. Yeah, they need more business. Do you know why? Yeah, they need more business because active managers, okay, investors fled active managers for index investing. So you don't need Morningstar to give you all those ratings if you're just investing in the SPY. But guess what? Morningstar announced earlier in May that it will rate so-called semi-liquid. Yeah, semi-liquid. It could be semi-illiquid, semi-liquid, right? It's the same thing. Whatever that means, it sounds like a load of crap. It does. Do not buy semi-liquid funds that Morningstar is rating and that are charging you 4% a year, folks. Essentially, alternative assets sold to retail investors that offer more liquidity than private asset partnerships, but less than traditional stock and bond funds. If that doesn't sound like a disclaimer, then get your ears checked, right? This stuff's wild, man. I spent a lot of time going. But yeah. And as this opinion piece states, okay, but I agree with this opinion piece, and it's got a lot of great information in there. The ordinary investors are decades late to the private asset party, okay? They would, it would have been nice to have the access to this early on in the days, right? When it wasn't that 25% of the people in the business were taking all the money and 75% were losing it. Yeah, and now what are they doing? Franklin ultimately is going to sell those Harvard investments to you folks, okay? Yeah, and their CEO likened the process of educating advisors on Franklin's alternative asset products to hand-to-hand comm debt. They would do well to put up a fight. So be wary, folks, and stay away from those in your retirement accounts if you can. Because what they don't even talk about in this article, right, is the mark-to-market. How are you going to mark-to-market private equity funds in retirement accounts when nobody actually knows the real value of a private company? High risk, high reward is the game, folks, but it's not going to get done going through Franklin Templeton at 4% a year when they're buying you funds. It's like a third-party deal, right? They're not buying the funds. They're buying them for you at 4% a year. And yes, there'll be, I've spent enough time. It's a big one, folks. It's coming, and be careful of it. And if you want access to something like that, folks, you want to hold an alternative asset in your 401k, there are many self-directed IRA companies out there. Go get a reputable one, okay? You pay a fee usually on a yearly basis, something like $200 or $300 a year. You set it up. They have certain rules that you have to follow, even within there, but you can do a tremendous amount. And yeah, and don't get caught up in the ETFs paying 4% a year. Don't do it. Folks, S&P's up by 44. We're coming back and talking equities. Don't go away.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. We have the NASDAQ up about 200 points right now, just backing off from those highs, but quite a day, up by 0.9%. As I mentioned, you got Apple shares up by 4.1% right now. Google up by 2.4%. NVIDIA shares up by a full percentage point right now. On the flip side of that, Pinterest down by a solid 10% right now, down $3.70 on their numbers. Whoop, TTD, the trade desk. Now, this one, folks, going to be interesting to see how this one plays out. Okay, this one's down 38%. You talk about some volume. Okay, you're going to get volume on this equity. July 17th, you had 111 million shares. And what was going on July 17th? Can't get down there. All right, I can't even see. But no matter what was going on, they had their numbers. Can't get back up now. They had their numbers last night, and what freaked out the market is that their CEO basically said that the uncertainty from big ad spenders that they were more prone to versus the likes of the bigger players that service smaller businesses, whether it's a Shopify, something like that, that the big players were pulling back and they were uncertain. But boy, a wipeout like this, man, 40%. And this is not a small company, folks. This company just lost $18 billion in market cap, and it's worth $26 billion right now. So, you look at that, you look at the likes of Meta, okay, no reaction whatsoever. Now, Pinterest has got problems, that's for sure. But on the advertising front, no reaction whatsoever, which surprised me a bit. If you're getting that type of reaction, okay, for a company like Trade Desk, the Trade Desk, oof. I could see a reaction, but it's not hitting the big dogs. And yeah, Meta's got more going on than that, but they have more going on by that just because their advertising engine is just a juggernaut. Yeah, and I talked about earlier, man, earlier in the morning program, Meta looks like it's doing an A to B, C to D, man. Okay? On a weekly basis, you broke above the B point with volume last week. Now, that's going to be a problem. You trickle higher on no volume. Okay, but you did. You got above last week. You got above the highs of February. You break out with volume. You're continuing higher. And that would bring you all the way up to 1145. And this pullback you got on Meta, that was a perfect 382, folks. Perfect. You go from $88 to $750, $740 maybe was the high. And you back off of 382. And that's like a $650 A to B leg, folks, that brings you up to 1150. Breaking it with volume, man. That's what the charts are saying. Now, Google hasn't broken those highs just yet. You're not going to have volume this week, not versus the last couple, but you're trading higher and you're trading into the highs of earlier this year as well. Yeah, look at Netflix today, up by 2.6% right now. Oof, Warner Brothers Discovery. Oh, continuing the acceleration from yesterday. So let me guess, they got some downgrades on top of what the news was. Yeah, you have everybody adjusting their targets. So anytime you get, a disappointing news event, folks, keep in mind that there's always a possibility that you get all those revisions, right? And here they are. You get a revision from KeyBank from 18 to 16. Analysts flag second half challenges. Wells Fargo maintains. Raymond James maintains outperform. There you go. But they did lower their target from 14 to 13. Let's take a look at this thing technically. Oof. Well, you're backing off on lighter volume. That's all you can say. We've charged higher on volume. You took out the highs we had, but you're coming back. What are we coming back to test here? Coming right back into the bar June 9th? Yeah. Maybe you come back to that $8 or $9 area. Whew. All right, you got to pull back, but no volume. On a monthly basis, check out that volume. All right? That's what you like to see. Heck of a month for Warner Brothers Discovery. You break above the highs of last year. You do it with tremendous volume, and we're backing off with lighter volume. We're only 8 days into August. We'll see how it plays out, but check out that monthly and a weekly as well. Strong numbers coming into the highs there. But on their numbers, you're trading lower on back-to-back days. Excuse me. Tesla's up by 1.9% today. I saw the headline earlier. They're going to score a permit to run a ride-hailing service in Texas, so that's expanding to a certain degree. Ford up by 0.4%. GM up by 1% right now. Car company Stellantis up by 2.1% right now. You know, the trade desk, because they're talking about brands too, okay? This is the CEO. Some of the world's largest brands are absolutely facing pressure from tariffs and inflation. And it's just surprising. You can have an equity like that lose so much value when they are in the business of running an advertising platform, and there's no reaction in the market whatsoever. And Under Armour, of course. Yeah, stay away from Under Armour, folks. All right, Under Armour, they miss on earnings, they miss on revenue, and this stock's got some problems. You know, you're coming back down to the April lows, and I wouldn't be touching that right now. Yeah, I talked about Yelp that's moving today. Looks like it's heading to the bottom part of its channel. Maybe $27. We got volume. Look at this move on Yelp. Expedia up by 4% today, $7.31 on their numbers, raising their full year forecast for bookings and revenue. All right, and Take Two on their numbers. Look at that bar. Oof. Oh, you talk about a give back. Oh, look at that. These are always wild. So they had better than expected results, raised its annual bookings forecast, but the market said no. No, we just traded from $90 to $245 over the last 2.5 years. Trading down by 4% right now. All right, on a weekly basis, we're not quite going to get above that, but you got most of that bar. Would have been nice for the bulls out there to really just engulf that entire candle last week. On the NASDAQ, though, you did it. Look at this, right? Zoom it in. Not like that. Yeah, you're going to do it. Amazing. So where's the open on this one? The open's 22,850, and the close 22,870. You got to love it. So it opens 22. Look at this. NASDAQ's going to engulf it. Now, you're engulfing the body. You're not getting the tail, okay? Let's see how the volume comes in. You had some big numbers in volume last week because of the earnings numbers there, but pretty remarkable. You can engulf that entire candle of last week on the NASDAQ, up by 0.8%. 10 minutes until the closing bell. One more segment, folks. Come on back. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Markets higher coming into the Friday close. You jump over to gold right now. You trade higher, you rip it lower, baby. Right back to where we were 24 hours ago. We're trading at 34.57. And yeah, finishing up on that conversation of alternative investments, okay? So I was talking about the article that I posted in the Tiger's Den in terms of May. This one's out this morning. Private equity's courtship of retail investors irks pensions and endowments. Well, the one part I want to get to about this, okay, is that pensions and endowments are worried because you're going to have, of course, a massive amount of funds coming in competing against them. The part that goes to what I was saying, folks, okay? Institutional clients are fretting that their returns could wane because fund managers, flush with retail money, will have to invest in mediocre deals to put all the extra cash at work. Okay? Basically, they're not going to get any more good deals because why would you give an institutional client a good deal when you can just offload that deal at an overpriced level to the retail managers that have to put extra cash at work. That's it, folks. That's what's going to happen. Yeah. Be wary. Tell everybody. Keep your money out of those ones, man. Especially early on. Imagine all that money having to come in and fill those coffers on all these funds immediately. And folks, the ETF makers, they're going to want every dollar you invest to be in these because they're going to be charging you 3 to 4% a year. So it's going to be everywhere. Shell game galore. You got it, Z. Crazy, man. All right, folks, thanks so much for tuning in, ending your trading week right here with me at TFNN. Have a great weekend. Have a safe weekend, folks. Enjoy it. We'll see you back here Monday morning at 9 o'clock for the morning market kickoff. Thanks so much, folks. Have a great Friday. Have a great weekend.